Hello, everybody. My name is Graham Elwood, and you are watching the Boom Political Vigilante, bringing the truth out of the darkness. Well, man, I think the financial collapse is starting. We have talked about this on the show for the last couple years, how this is going to happen. And we've seen, we talked a lot about last fall, the FTX collapse. But one of the things we talked about with the FTX collapse was that was a crypto exchange for sure, but what it was doing was the same corrupt stuff that regular central banks have been doing, only the central banks just get away with it. So if you haven't heard already, the Silicon Valley Bank last week started, there was a run on that bank basically, and that's a traditional bank. And it is, I believe, the second or third largest bank to ever go down. The only time a bigger bank went down was then whatever Lehman Brothers back in 2008. So several things are happening now that I've been telling you, be careful. First of all, when I remember last year, I did numerous videos where I would say, if you hear politicians or the media say your money's fine, that's when you're in trouble. Well, gee, guess what? Guess what we just heard Joe Biden say? This is on Straight Arrow News. This is what he said recently. Oh, come on. Let's go. Come on. Here we go. Come on, Twitter. You can do it.
That the banking system is safe. First, all customers who had deposits in these banks can rest assured they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business. No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the deposit insurance fund. Because of the actions that our regulators have already taken, every American should feel confident that their deposits will be there if and when they need them. Second, the management of these banks will be fired. If the bank is taken over by FDIC, the people running the bank should not work there anymore. Third, investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works. And fourth, there are important questions of how these banks got into the circumstance in the first place. We must get the full accounting of what happened and why those responsible can be held accountable. In my administration, no one is above the law. And finally,
except your son,
must reduce the risks of this happening again.
We believe in truth. We believe it's worth.
All right. So there's that. So let's just, this article was in Fast Company, Silicon Valley Bank. It's a wonderful life bank run for the digital age. The downfall of the Valley institution, which has been called the backbone of the startup economy, was caused by good old-fashioned bank run, but one that ran at internet speed. So then there's this. Oh, wait a minute. CEO of Silicon Valley Bank sold $3.75 million in stock in the troubled bank 2 weeks before its dramatic collapse in an automated trade plan on January 26, and CFO ditched $575,000 the same day. Well, what are they talking about? Here, look at that. This is their amounts right there. This is 2 weeks ago. This is the end of February. Look at these amounts. And then this, by the way, this is all, you can't even see, it's too small. All of this red, these are all of the bank stocks today as of March 13th that are all in the red. They're all losing money. This is like 30 banks right there. So I just want you to see that. So there's this they all lost. So, nothing corrupt here. Warren Buffett, if a bank needs a government bailout, the CEO and spouse should lose their net worth. I don't think that's going to happen. And then this just happened. HSBC acquires Silicon Valley Bank's UK division for £1. They bought it for £1. That's insane. Depositors will be able to access their funds through the deal. All right. Okay. So we've got this. They scammed it. And then this guy did that. And then, okay. And then let's go back to now let's look at this. How did this happen?
Dodd-Frank regulations that are crushing.
Hold on.
The legislation I'm signing today rolls back the crippling Dodd-Frank regulations that are crushing community banks and credit unions nationwide. They were in such trouble. One size fits all. Those rules just don't work. And community banks and credit unions should be regulated the same way. And you have to really look at this. They should be regulated the same way with proviso for safety as in the past when they were vibrant and strong, but they shouldn't be regulated the same way as the large, complex financial institutions. And that's what happened. And they were being put out of business one by one. And they weren't lending. Since its passage in 2010, Dodd-Frank has dealt a huge blow to community banking.
Huge.
As a candidate, I pledged that we would rescue these community banks from Dodd-Frank, the disaster of Dodd-Frank. And now we are keeping that commitment, and all of the people with me are keeping that commitment. We passed and signed a record number of bills terminating job-killing regulations. In the history of our country, no president, whether it's 4 years, 8 years, or 16 years in one case, has ever passed more regulation cuts.
So,
the legislation.
oh, shut up. I can't listen to that moron again. Stop talking. Stop talking. And then look, this is what's next. This is what's next.
Unique and distinct.
Oh, wait, hold on. Should the Fed
period of time where we should be looking at bailouts, the culmination of events that led to this problem with SVB is pretty unique and distinct to their business practices. I'd say the one thing.
No, it's not unique. It's not unique. This is the same old banking corruption we had back in 08.
Occurred with SVB that's occurring with all of our financial institutions is the impact that these significantly increased interest rates are having across the economy. That clearly played a key role here. I think if anything, lawmakers need to walk away with this as a reminder that we need to get inflation under control to make sure that we don't have other shocks throughout our economy. I don't think we're at a period of time where
oh God, it's so much nonsense. I can't even. So let's be real clear here. So just to back up, so Dodd-Frank was passed by Obama, which is weak regulation after the 08 crisis. It's basically, I always call it, it's a Band-Aid on a shotgun wound. Trump repealed it, but let's be real clear, 17 Democrats in the Senate were okay with Trump repealing Dodd-Frank. 13 House Democrats were okay with it. So it's, once again, both parties have been doing this. And this is the scam that has been happening. This is Goldman Sachs has been in every presidential cabinet since Reagan. This is how both parties are corrupt. Bush didn't do anything about 08. He didn't put anyone behind bars. Obama didn't put anyone behind bars. There was no real sweeping legislation. Let's not forget Glass-Steagall, which was Depression era FDR legislation. It was Bill Clinton that got rid of that in 99 when everyone was talking about a cocktail dress. He quietly got rid of that his last year in office. So this isn't like, if you think one party is going to be better, that they're both awful. They're both corrupt. And like, right now, conservatives are like, this is what happens when Biden is in office. And liberals are like, Trump passed. He got rid of Dodd-Frank. They're both awful. Trump did get rid of Dodd-Frank, and Democrats helped him do it. Now, to talk about this is the host of the Crypto Kitty podcast, comedian. She's been a regular on this show. We've talked a lot to her about Bitcoin and other finance stuff. And we're going to get into why Bitcoin is going to shine in the middle of this. Please welcome back to the show, Rosie Tran. Hi, Rosie.
Hey, how are you, Graham? Let me get centered here so I'm not getting my head cut off with the PV logo.
Yes.
So actually, there's something even more sinister going on, believe it or not.
What?
Yeah, so they're not calling it a bailout. And as you heard Biden's lying lips moving, he said, this is not a bailout. The banks are paying into this FDIC insured program, and that's where the money is coming from. It's not coming from any taxpayer money, Graham. But actually, that's not what happened. So they're changing this regulation. You can look this up right now. This is not something that I pulled out of my butt, unfortunately. They're actually using this to push through a couple super corrupt policies. So the first corrupt policy that they're allowing is that they're changing now the banking system so that banks can post treasuries as collateral and do unlimited lending based off of that. So I will send you some resources after the podcast so you can put them in show notes or read up on it just for yourself for future podcasts. So this is basically allowing the centralized Wall Street banks more gambling power for the casino. I'm laughing, but I'm laughing because it's absolutely insane.
Yeah, it doesn't surprise me because.
But we have to allow it because we have to save the banking system.
Yeah, we have to.
We have to.
Yeah, we got to save the banking system. If you or I made these kind of corrupt choices, we would.
Oh no, they're not allowing it. Not the little guy. No, absolutely not. But if you want to take depositors' money, hardworking savings people's money, because this is a startup bank where a lot of startup and Silicon Valley and venture capital have their money, but it's also a regional bank where a lot of local people keep their money as well. So if you want to if you are a bank and you want to take people's hard-earned savings and gamble with it, that's totally fine, Graham. But you as an individual, as a middle-class person, you're not allowed to do that because you're not smart enough. You don't know enough about finance. But these big corporate central bankers, they're experts. So they can gamble with your money if they want. But you can't gamble with your money. Heaven forbid.
Yes, they can. And you're seeing it. It's so, it doesn't shock me at all what you just said, because that's usually when there's some kind of crisis is when they use that as an opportunity to pass through some other
just
awful
push
stuff.
it through. Just push it through. Yeah. So they're allowing. So let me repeat that for the listeners. It sounds a little bit like financial jargon, but they're allowing now. I have my crypto kitty ears and my Bitcoin sweatshirt. They're allowing now banks. They're passing through a legislation that banks can use treasuries, which is supposed to be the safe conservative investment, as collateral for taking more and more loans against that, and basing it off the par value and not the market value. So basically, they're allowing banks more leverage, more collateral, more debt obligation again. A second thing that they're doing that's super scary is that so the federal the FDIC limits are $250,000. And you will be protected with that much. But this is a special bank, because it's a Silicon Valley bank, with a lot of venture capital money in. So we have to protect, up to $5-10 million of this depositor money. And who has $5 or $10 million lying around in the bank, Graham? Do you, or do you think it's, these big venture capital hedge fund guys?
Well, I don't think it's me. I mean, I haven't checked my bank account this morning, but I'm pretty sure there's not $5 million in there.
So you don't have $10 million just sitting in a checking account?
I'm not today. Usually,
okay.
Yeah.
So who are these people that they're protecting with these FDIC limits? So they're saying, oh, no, don't worry. We don't want to run on the bank. We're going to raise the FDIC limits from $250,000 to $5 to $10 million. Don't worry, your deposits are safe. And by don't worry, we mean the super, super rich who have their money in this bank. Don't worry. So it is a form of bailout. They're saying it's not a bailout. It's not a bailout, Graham. It's not a bailout. But what does that sound like to you? I mean, maybe I'm slow, but it sounds like a bailout. I don't know.
It's like when they spent all of last year going, we're not in a recession. All the numbers say we're in a recession, but it's not a recession. They're just
no. There's no inflation. There's no inflation. It's transitory. It's transitory inflation. Look over there, Bigfoot.
Yeah, exactly. There's balloons. We're being attacked by balloons.
We're being attacked by birthday balloons, and we have to be careful of these birthday balloons hovering over the Pentagon. It's not like we have a military-industrial complex and the largest military budget in the entire world, possibly in the entire solar system. I don't know if the UFOs have come yet to tell us that they have a bigger military industrial complex, but I'm pretty sure out of the entire Milky Way solar system, USA. So we're number one. We're number one. I know I saw your special, so I'm mocking you.
I don't know. I mean, I think it's fair though that these balloons were attacking the poor defenseless Pentagon. I mean, they're just a little mom and pop that barely has any money. We can't expect them to be able to defend themselves.
Exactly. So that's what's going on with the FDIC insured limits. So it sounds good on paper. It sounds like they're trying to help the little guy. Oh, we want to make sure you get your deposits back. But 250,000 is more than enough to protect the average person. The average person does not have, 250,000 sitting in a bank account. In fact, I think the average person, according to Bankrate and other government statistics, has $2,000 in their checking account, which is protected under the current $250,000 FDIC insurance. Right. So who is being protected by this $5 million, $10 million FDIC insurance depository number that they're raising it to? They're saying, don't worry. So I'm sorry to say, maybe I'm just a plebe, but I don't know anyone in my personal circle that has 5 to 10 million sitting around in a checking account.
Yeah, it's so clearly a bailout, and that's what they're going to do. And
no, it's not a bailout, Bram. It's not a bailout.
Not a bailout. Sorry, I said the B word. My fault. It's not a bailout. It's a financial bailing of someone who needs to be out of a financial pickle.
So they create these fun words. I don't know if you've heard in the past 5 years a new vocabulary word called quantitative easing.
Yeah.
So they like to make these fun banking words, like the average person who's too busy trying to pay their bills is like, what's that? You know, so they make up these fun banking words that are completely made up. So I bet you there's going to be a new bailout word in the next, few months where they call it something else. And it's just like quantitative easing was their code word for printing money and bailing out the big banks last time. And it's so, I laugh because it's so depressing, but it's also makes me so angry because, Graham, we absolutely don't have money for universal health care. We absolutely don't have money for UBI. We absolutely don't have money for any programs to help the average Joe. But we have to save this bank run because the entire banking system will collapse if we don't do it, even though we already did this in 2008 and now it's happening just a few years later.
Well, yeah, it's such a great point. They're like, oh, how are we going to pay for Medicare for all? How are we going to pay for student debt forgiveness? How are we going to pay for free college?
There's no money, but we just print it for the bankers. It's fine.
Yeah. And the wars. And the wars. It's the other thing too, I wanted to point out to people, and I said this on Twitter today. Remember that the first big collapse happened in March of 2008. The first bank went under in March of 2008. And then it took the spring and the summer before we got to September of 2008 when it fully collapsed. So, and I said this to my audience, and I've been saying this for years, get your money out of the big banks, get it over to a credit union. I watched a statistic today on the show Crypto Casey where something like in the year 2021 or 22, there was 19 credit union that went under compared with 173 regular banks that went under. Wow. Because credit unions are non-for-profit. So they don't do this crazy shit of gambling with your money. They're not out there investing.
I mean, just think about what they're doing though. I mean, just the fact that you even said that, just think about the fact that I'm giving you my money to hold my money for safekeeping, right? So that's just what a bank is. A bank is supposed to be holding your money for safekeeping so that you don't have it under the mattress and some guy comes over and steals it. And then they're taking your money and they're going and doing these crazy derivative projects. I've actually tried to research some of these derivatives and other products. They're so confusing. I worked at a bank, at a big bank that rhymes with Argo. and you can't even the average bank manager doesn't even understand these because they're so convoluted. It's so convoluted. It's they're trade credit default swaps, and they're swapping with the thing, and they're betting that this is going to go up. It's even Vegas is we don't understand this. It's too convoluted. So how is that even legal that I'm working my butt off? And if you are thank God you and I work for ourselves. If I was a W-2 employee, the tax rate is 30-40%. So I'm working almost half the year to pay money to the government, and they're then taking that money and giving to Wall Street bankers. Like, that doesn't feel normal. That is normal, but it doesn't feel like it should be a thing.
Yeah, and they're getting away with it. And this SVB thing is just like, and I want to pivot here.
Don't trust SVB. Don't trust SBF. No 3 letters with an S. Don't trust them. Just run.
Hey everybody, thanks for watching. We are still in our 9th month of demonetization from YouTube. So support what we're doing at patreon.com/Graham Elwood or rockfin.com/Graham Elwood, which is a blockchain cryptocurrency platform. It's free to sign up, and there's a premium level at $10 a month. And for that, you get everybody on the platform's premium content. Myself, Lee Camp, Ron Placone, Jimmy Dore, Whitney Webb, Kim Iverson, Abby Martin, and many, many others. You can also support what we're doing at Venmo at Graham-Elwood, and go to GrahamElwood.com. We have a PayPal button and a PO box. I also have crypto wallets, which are all in the show notes. Thanks for supporting what we do.